Hello and welcome to TA for Traders. It's Tuesday the 12th of December. In this video we're going to look at the charts on the US dollar versus the Canadian dollar, which on TradingView has the simple code USDCAD and is commonly known as the loonie trade. What we'll see is that the US dollar Canadian dollar's been trapped in what I call a pincer formation between some moving averages. It's got a down tracking 200-day, an uptrend in 2050, and it's going to trade between the two in a tight trading range. It's also the dollar up against a band of resistance, which is causing some consolidation. It needs improved volumes to break this and improved upside momentum. Let's look at those charts. So starting with the weekly chart, so each candle here represents 1 week. And you can see the pincer formation that I'm talking about as the downtrending 50-day is the resistance level, and then the uptrending 220-day are the support levels. You can see it more clearly actually when we move to the daily, but that's roughly the trading range at the moment. You can see that we've had a flag broken up, but we've hit resistance. This resistance dates back from June, and you can see there is a band of solid resistance, a lot of selling levels in there that's causing this consolidation. Momentum, the RSI is back above 50, 52.89, but is just drifting sideways. And the MACD, although they've showed improved upside momentum, they're not yet back above zero, so keep your eye on those. On the daily picture, here you can see more clearly we've got the upside boundary on the 200-day moving average, with the 50-day giving support, which did come into play last week. It was positive that held, and also positive that we moved back above the 20-day, which also is moving upwards. Obviously on this chart you can't see the historic resistance levels that we could see on the weekly, but you can see that already we are starting to create quite a boundary just above the 129 level. And we will be getting the 200-day moving down to that level over this week and next week. RSI is at 55.8, so still above 50, but it is in a shallow downtrend, indicative that momentum is being lost. And also a concern is this decline in volume that we've seen over the last few days. No surprise that we're drifting as the volumes come off. For this market to break the resistance, we will need increased volume. Increased volume will move the US dollar higher, break the resistance, and cause the momentum to shift upwards as well. So it'll be positive all around, but we do need that increased momentum and volume. MACD are tracking sideways, although they are still both above zero, and they're both short and long at the same level at the moment. On the 4-hour chart, so here each candle represents 4 hours of trade. Slightly more concern on this. We've come below the 20-day. You can see that the 50-day is already rolling over, which is a slight concern, especially if we came down to that level and went below it. So be aware of that. 200 is still moving up. But we are getting this picture of lower highs coming through, and as I mentioned on the daily, the volumes are declining, and you can actually see that at the moment, the last few hours, we've had increased volume on the down 4-hour periods, which is a slight concern. Momentum has been lost. We're just marginally above 50 on the RSI, 51.53, but you can see that the short term is below the longer term on the MACD as they track towards zero. Keep your eye on those. Some would already be seeing this as a technical sell indicator, short term moving below longer term. I prefer, if that happened below zero, it definitely would be, but as it's above zero, I'm just taking a watching brief at the moment on that. I'm going to just keep an eye on these moving averages and just see what happens over the next few 4-hour periods. Looking at the support and resistance levels, we've got the first resistance from the high of 30th of November, 129.09. Then from the 200-day at 129.42, with supports coming in at the 20-day 127.75 and the 50-day 127.13. So that's been TA for traders, looking at the US dollar versus the Canadian dollar. The key takeaways from the video should be that we're getting a pincer formation between the moving averages. We're into this band of resistance. Momentum and volumes need to improve, and we've got slight concerns coming through from the 4-hour moving average. Thanks for watching the video. Please remember these videos are for information only and are not an investment recommendation. If you're not a subscriber to my YouTube channel, please do hit that, hit that subscribe button. You then get email updates when I come out with other videos. I don't just cover the foreign currency markets, I do commodities, equity indices and single stocks in the UK and the US. I'll be showing you a disclaimer after the video. Please do read through it, and it explains the regulatory relevance of the information I give. Okay, thank you.